Good morning. Today we will be talking about the SBI Cards IPO, which is listing tomorrow. Many investors are waiting with bated breath to see what the listing would be. The interest for this IPO has been building up over the last few months, and even before the issue details were released, just with the news that the issue is coming, the grey market trading for this IPO had started. But a lot has changed over the last few months, specifically over the last few weeks. Many grey market traders believe that the grey market premium plus the issue price would give an adequate idea about what the listing price would be. But contrary to that, today we will be discussing a lot of IPOs in the past where the same has not held true. If we talk about the Coal India IPO, which was the largest IPO till date in India's history, which came in November 2010, then the issue size for this IPO was 15,199 crores. The issue price was rupees 245. The GMP on the day prior to the listing was rupees 42. So approximately the listing price should have been in the range of rupees 300. However, the listing price was rupees 342. Coming to the next IPO, that is the HDFC Life IPO, which came in November 2017, the Iraq and Syria situation was very tense at that time. The stock markets were also under a lot of pressure, which is the same situation right now. The issue size for this IPO was rupees 8,695 crores. The QIB portion was subscribed at 16.60 times, the HNI portion was subscribed at 2.29 times, and the retail portion was not even subscribed one time at just rupees 0.87 times. So we can say that the approach by the investors was quite lackluster. The GMP for this IPO started at about 18 to 20 rupees, but on the listing day it was just 1.5 to 2.5 rupees. So against the issue price of rupees 290, we could estimate that the listing price would just be around rupees 293. However, the listing price was rupees 344 on closing basis, and the share has touched a high of rupees 650 since then, and even in the current dire market situation, the share is trading at about rupees 548. Next, we will take a look at the SBI Life IPO, which came in October 2017. The issue size was 8,400 crores. The QIB portion for this IPO was subscribed 12.56 times, the HNI portion was subscribed one time, and the retail portion was again subscribed less than one time at 0.81 times. There was absolutely no GMP trading for this IPO, but in spite of that, the listing was quite good. The issue price was at rupees 700 and since the listing, the share price has crossed rupees 1000, as we all know. The next we will talk about the HDFC AMC IPO, which came in August 2018, that is quite recently. The issue size was 2,800 crores. The issue price was quite high at rupees 1100 rupees. If we look at the market value to the book value ratio, it was quite high at 19.24, and the estimated EPS to the issue price ratio was 37. Which we can consider as quite high. The QIB portion for this issue was subscribed at 192 times, the HNI portion was subscribed 195 times, and the retail portion was subscribed 6.57 times. So the overall subscription was 82.92 times, which is quite high. The GMP for this issue when it started trading was rupees 450. So against the issue price of rupees 1100, we can consider that the listing price would be in the range of somewhere around 1500. At one point, the GMP also went up to rupees 560. However, on the listing day, the closing price was rupees 1815 rupees, and the current market price is rupees 2973. Very recently, if we talk about the India Mart IPO, which came in July 2019, the issue price for this IPO was rupees 973. The PE at the time of the issue coming was 128 and the market value to book value ratio was 17.40. GMP for this IPO was 91 and had touched a high of rupees 160 while the issue was in progress. On listing day, the GMP was rupees 130. So, according to normal calculations, the listing price should have been rupees 1103. However, the listing price was higher than that, much higher than that at 1302. Coming to the SBI Cards IPO, the enthusiasm from the investors has been quite high in spite of the current market scenario. If we take a look, the QIB portion has been subscribed 57.18 times, the HNI portion has been subscribed 45.23 times, and the retail portion has been subscribed 2.50 times, bringing the overall subscription to 26.54 times. The issue price is rupees 755. GMP initially when the news came of this IPO was rupees 350, but considering the last week scenario, it has gone to negative minus 50 and then minus 20, and currently it is at minus 10. If we take a look at specifically this IPO, it is very easy to say the listing price should be, considering the fundamentals, in the range of rupees 1100. But that is not how the market works. The market takes into consideration the overall market scenario plus what is happening across the world. If we take a look specifically at this IPO, the fundamentals are very, very good. The company is working in a sector where there is no other listed company on the markets right now. If in the US there are more than 100 credit cards issued for about 100 people, in India it is just 3 credit cards per 100 people. So we can gauge the scope for the development for this company. On an average, the growth rate for this company and other credit card companies is about 40% per year. Compared to this company, there are no other credit card companies expected to come into the market for another 2-3 years, because the credit card companies currently are working along with the banks, and for them to separate the company and to establish a 2-3 years track record will take another 2 to 3 years. Now coming to the broader markets, we all know that the coronavirus, the crude issue and the Yes Bank issue have been affecting the broader markets. During the last week itself, the Dow Jones, the European markets and the Japanese stock markets have shown an earthquake-like situation where stocks have fallen drastically. On Friday itself, the markets corrected by about 3,500 points before closing for about 45 minutes. Thankfully, at the time of closing, the market had recovered quite well. Over the weekend, we have seen that the Dow Jones, the European stock markets and the Japanese stock markets have shown quite a bit of recovery, which leads us to believe, taking into consideration the technical indicators of Nifty and Sensex, that the markets will open on a positive note on Monday morning. Also, the normal markets will start at 9 o'clock, while the IPO will get listed at 10 o'clock. Which leads us to believe that the positive market opening will have a good effect on this IPO's listing. Hence, we strongly recommend you to hold on to your allotted shares and not be in a hurry to sell off. Considering about 12 months' time, we safely expect the IPO to give you very good returns at about rupees 1450 compared to the current listing price of rupees 755.